Okay, so last time we started talking about the accounting equation, and which is the basis of accounting basically. So who remembers what the accounting equation is and wants to put it up on the board here using our little cards over there?
Where do I put it?
Yeah, just up here. Yep. That's okay. Yeah, awesome. Way to go. So these are our different account classifications. But, okay, so we talked about different accounts that are part of those account classifications. So who remembers one of the asset accounts?
Cash.
Cash, okay. Give you a hint, there's 4 of them. Supplies.
Prepaid insurance.
Okay, liability. Accounts payable. Okay.
Capital.
And then the owner's equity is
Capital.
capital. Okay. So, what we're going to be doing, I'm going to have you guys get into pairs, and Shannon just go with someone with the group, but otherwise everyone's in pairs. And I'm going to have you guys actually write a transaction. Remember, a transaction is a business activity that changes the accounting equation. You're going to write giving that transaction to another group, so everyone's going to get one that's not their own, and you're going to actually complete that up here. So I've got some directions for you. So let's see our pairs here.
Megadeth. Team Megadeth.
I've got some cards here for you, so you'll need something to write with.
I've got something. Oh, I have something.
Okay, awesome.
I've lots of things.
And then do you guys want to move over here so Shannon can kind of be, if you want to just scoot your desks over this way? Yep. Or you can just move to that one over there. Okay, so I'm going to split you up so that we're not all writing the same transactions. Who wants to write the very first transaction that would actually get money into our business? Because remember, the business starts out at 0. Okay, these guys are going to do that one. Then I need someone to do a transaction where cash increases. We will. Okay? One where cash decreases. Okay, and then this is probably the trickiest one, but I know my senior girls can handle it. You're going to be doing a transaction that does not involve cash. That cash is neither increased nor decreased. Okay? So it has some directions for you in there. You have to, give a transaction date for your, and let's just put yours as January 1st since you're the very first one. So January 1st of 2014.
Why not April 13th?
You'll put that, somewhere in there. Then you're going to write it in sentence format, but make sure that you have, in your transaction, you're kind of listing, or you're saying in there the 2 accounts that it would affect, because you need to have at least 2 accounts that it would affect. And write that transaction in a sentence format that's going to be shifted to someone else, and they're going to actually put it on the board here. So it's just kind of a review of what we did, and I'll come around and you talk amongst you. Yeah. Okay. Yep. Cash into the business. Well, remember when we were going through those in the book last time, it said like, I'm not gonna say what it said, but it basically gave you a sentence and you had to figure out, so do you remember kind of what that?
Oh, so we're trying to do it like that?
Yeah. And then you're not gonna actually complete it because it's gonna be shifted to someone else and they're gonna actually do it.
I just don't get it because we don't know why it was started.
Okay, let's say,
Because if we're all doing on the board.
let's make sure all your transactions are under $1,000.
We don't know how much we can take out. Oh, wait, or we can say. Sam, how much are you guys?
You don't necessarily.
We can't take out more.
I know what you mean, I know what you mean.
Okay, they're gonna do 1,000, all of you guys are also, are gonna do less than 1,000. Okay.
It's okay.
And you don't necessarily have to put the effect to account. So,
Yeah, I'm gonna start with this one. See if you have to put $1,000 to put into.
the business.
Is our date different than theirs?
They're starting with January 1st, so as long as, yeah, it's gonna be different. It's just, you can do February 14th if you want.
What do you, probably the
Okay. Okay, so remember, this is the business, not necessarily an individual person's record. So, yeah, you're, otherwise it's right. Well, Jemima can be the owner.
Okay.
In case you had, it's gonna be Jemima, is gonna be the business owner's
I
name.
already know that.
We have Jenna.
I don't
We have
think,
Jenna.
I don't think they told us what to do.
We just call it the business account.
So what makes, if we continuously do, what makes you tell us what to do?
Whoa.
Whoa, turn that around.
Since we're the guys, we should probably take the name.
Oh, no, I think you're outnumbered here.
Let's name you Shannon.
Okay.
It was like,
Okay.
Yep.
That's good. Okay, and so would you guys know if you had to look at this, what account mine's gonna affect?
Yeah.
Okay, awesome. So we got one group done over here.
We're done.
Okay, awesome.
So we go.
I am. Is your name Jemima?
What day is it?
Like the pancakes. Aunt Jemima.
I just kind of
So that's her. It's her her business.
Am I right?
Aunt Jemima.
The supplies and
Sure.
cash.
Yes,
That
sir.
sounds good to me. Would you take our, you want pancakes? That sounds good.
I had toast this
I'll
morning.
have her number.
Citizen,
Have you?
Capital is, remember capital is,
Are you guys like making money?
assets. They used to track all your liabilities from your assets
like,
to
you like
get all
pay
your
us
equity.
every
So that's everything that, like, basically the partners,
So what do you?
Because
partners
like,
stake in
what
the
was
business,
it on there where
basically.
you had to put it in capital at the end? That didn't make
I see what you mean, like,
We're gonna be going over capital a little bit more, so if you don't wanna use capital, like, don't use that in your problem.
but I see what you mean, it's on the same side, so.
What?
See, like cash and like supplies and all that stuff on the
Doesn't
same
matter.
side.
Yeah,
doesn't matter.
it is on the same side, but,
Oh, okay, yeah. Jenna thought.
okay. So I think what I'll have you do is just rotate your cards then, so everyone's getting,
I'm not laughing at you, I
Are you done?
oh, they just need the card. The instructions you keep, because you'll need to know what to do with the next card.
Wow.
You the card.
This is in this one. Yeah.
I told you
this
were-
is the same one using it.
This is an account.
I just do it like business.
Since it's format,
That's, it's good enough, you know.
This way.
That one was okay. I looked it over.
changing the rule.
What?
Okay.
Will this be okay?
Yeah, I'm good at you.
Well, except for, this is kind of saying that it's going from this account to that account. You don't have one line to begin with, so it's all getting.
Yeah.
Okay, so now, what two accounts are affected, so you can write underneath there what two accounts are affected. I didn't make enough sheets for myself, I should have done that. You have to also think, what are the classifications for the accounts? Remember the classifications are assets, liabilities, or owner's equity. So you figure out the accounts, you figure out what the classification of the accounts were, and then, well, you're gonna be writing it up on the board
So
here.
who's starting? Like, who has the starting?
We did.
We did, they do now.
And then we'll just go by
What
dates.
two accounts are affected, so?
It's
Prepaid insurance and cash reserve.
So it'll be minus zero, cash.
Right.
Is that what it's affecting?
What, sorry, track?
Prepaid, cash decreased
False.
$300.
That's why we write it down.
Oh, yeah, we
did
do
this for you.
He said decrease the cash, $300.
Is that actually
and then decrease
No, increase.
We got it on here.
Well, if you want to know, someone's gonna have to go up to the board and write that on there. Not yet, no.
Okay, so would ours be accounts payable, receivable? When would it be?
accounts receivable would be if like someone bought, and we're gonna talk about that, this we haven't gotten to yet, when, if someone, you know, bought services from you on account, because remember our sample business is a service. Yeah, which we're talking about, yeah. But you did, you went home, yeah.
Like you're on the table.
Was anyone else confused and thought the test was today?
Yeah.
Gotcha.
Okay, sorry. We'll go over, I'll make a
I
date
told
next
her.
time.
I told her.
Yeah, we did their job for
So
them.
I had to get,
Okay, so then do you know how to like go up and write it and everything? Okay. Okay, awesome. So you're July first.
Wait, that's all we have to do is write what accounts increase.
No, because it says, you have to answer, like, what is happening to the account increase or decrease in these?
Okay, Jenna and Allie, how are you guys doing?
Perfect.
Perfect, everyone's ready?
Yeah.
Okay, so we're gonna have, and so remember, you're gonna write, you'll tell us about the transaction, you'll write it up here, you'll make sure that the equation is still in balance. Yes, what's
So
it?
we have to let them go first, since they.
Yeah, we're gonna go by dates, whatever dates people put on there. So January 1st was the first one, and, yep, okay, Maddie, thank you. Okay.
So I just have to write the.
Okay, and if you wanna tell us what it
Oh,
said again.
Sorry, okay. So on January 1st, 2015, $1,000 was put into the business. So.
If you kind of tell us, like, this is increasing or decreasing.
So the cash increased and then the capital also increased.
Okay, and so, is the accounting equation still in balance?
Wait,
Yes.
do I put?
For the rest of them, that's fine.
Well, I'm just making
No,
notes. What? No, I didn't mean to.
It's okay, it's okay.
If you want.
She wants you to put 2 lines, but it's
Oh.
okay. Okay,
Go
so,
ahead.
okay, we have a July, okay, so actually the February would go, and then what was your date?
July 28th.
we have February.
Okay, because it's going in chronological order. Okay, so, Allie, are you coming up?
Sure am.
Awesome.
Do you want me to read it?
Yeah, read it, please.
Okay, it says $550 of supplies is bought on account on February 14th.
Okay?
So you're getting supplies. On account.
Okay, so why are you, so is it increasing, decreasing?
You have to pay this off eventually.
Okay, so it's increasing on both sides, or,
Yes.
okay, and so can you do the line and add up what we've got in each of the accounts now?
Yeah. So when it goes in.
We'll just do a line and then, yeah, underneath there, yep. So the first group kind of got off easy, they didn't have to do the math there for that. Okay, so are we still in balance?
But how do you still have $1,000 cash if you?
Because it's on accounts payable, we have.
It's
Yeah.
like
Oh,
a
okay.
Because they're basically saying, you know, we're gonna owe it to that person, like, we're good friends with that business, maybe they trust us to pay them back. You know, a lot of businesses aren't gonna do that. You'll have to ask some of if you know someone that owns a business, you'll have to ask them if they ever let people do that, because it's very rare anymore, it seems like. Okay, so then we had July 4th, right?
Yeah.
And then July 28th, okay.
On July 4th, Jemima received cash from her job. She received $500. So you add 500.
Okay. So when you say maybe I don't think I read it right the first time. So when you say she received money from her job, like she took money out of the business,
I
or?
have no
Like,
idea
she
what
got a
was
paycheck.
happening.
Okay, so,
But I was confused, someone was like, oh, we're all coming up with our own idea of how we're receiving money,
okay.
something like that. But then I realized, oh no, just say.
So,
receive
that's
this.
how you guys were thinking about it, so
Yeah. Right.
it's fine. And then, last one,
Of insurance with cash. So your cash will decrease 300, and your insurance, do you need it for the bus time?
I would, yeah.
Just draw a line.
Did anything happen to it?
No.
So are we still in balance? Yep. Okay, so we just, on this one, and this one's a little trickier because everything else, it was happening on two sides of the equation. This one, it's happening on the same side of the equation, so the signs will be different. So we've got insurance we have, but we had to pay for it with cash, so that's decreasing. But the accounting equation's still in balance, and that's the main thing, so. Okay, I think we're done with that. Brando?